The genius of Bitcoin is that it is the same and it will always be the same. It's hard coded. It is encrypted. It is permanent, immutable. And we know the supply and demand we know the supply, not the demand. We know the supply for the next 140 years. Why does the halving mean there'll be movement? Well, think about it. If you got all the miners, their costs are fixed. They're getting a certain number of block rewards and they have a certain profitability. If your block rewards get suddenly cut in half, your expenses stay the same. So now most of those miners would go out of business. Well, that's not what happens. The price rises because they're the ones that have to sell. Remember, they're the hedgers. They need to sell the coins to pay for their expenses. Well, they're not willing to sell them at a low price, so they hold them longer until somebody bids a higher price, and so it causes the price to rise. Inflation is real, and I think what's happened since 71 is that rate of inflation has accelerated.
Have you ever wondered why Bitcoin has been stuck in a rut since hitting its all-time high in March? In today's episode, we sit down with the renowned Mark Yusko, who shares his insights on the current state of Bitcoin, the impact of Ethereum ETFs, and what the future might hold for the cryptocurrency market. Stick around as we dive deep into market trends, investment strategies, and economic realities that could change everything.
But of course, housing prices are going to rise because it's an election year. Of course, oil prices are going to fall because it's an election year. Of course, the stock market is going to get juiced just before the election. None of these things are incongruous. They're incongruous when you think about, well, rates rising, rates falling. Yes. Oil's not falling because we're going in a recession. I don't know if you've been to a restaurant lately or been on an airplane. Airplanes are packed, restaurants are packed, people are spending, people are feeling good, employment numbers are still good. So there's no recession. Oil prices are falling because there's a perfect inverse relationship between presidential popularity and oil price or gasoline prices. So you got to have gas sub $3 at the pump for the Democrats to have any chance. I think she has no chance anyway, but I think for her to have any chance, you got to have gasoline prices plummeting. You got to have housing prices rising. You got to have, Nvidia stock at all-time highs. And so all of those things are going to be engineered. One Bitcoin is one Bitcoin. The genius of Bitcoin is that it is the same and it will always be the same. It's hard coded. It is encrypted. It is permanent, immutable. And we know the supply and demand we know the supply, not the demand. We know the supply for the next 140 years. So now, yes, could the majority of the people make a change to the code and vote for it? Yeah, they actually could. Very unlikely, but for reasons we don't need to talk about. But what people don't seem to snap to is we don't price Bitcoin in Bitcoin, right? We don't say one Bitcoin is one Bitcoin. Right. We say one Bitcoin is $67,000, $67,400, or, however many yen or euros or bolivars or Argentinian pesos. And so what's happening, Bitcoin prices on September 6th, and I remember that day specifically because I was jumping on an airplane to the Middle East, troughed at 53,000. And everybody said we were going to 20 and, the bull market was over and everything was going to, be a shit. I think that's just about the same time as the Fed did cut rates by 50 basis points. And now we're at 67,400. And we're probably just on the verge of breakout out of a very, very nice cup and handle pattern that would take us to the six digits by the end of the year. So anyway. This is an amazing pattern. It's an amazing consolidation. Prices consolidated from February until 4 weeks ago. And we were actually in a little bit of a distributive pattern. I actually didn't really like it. We made a series of 5 lower lows and 5 lower highs up until, a month ago. Now we've made 2 higher highs and 2 higher lows. So I believe we've broken that distributive pattern and we're about to break. If we go above 68.690, all bets are off. It'll be off to the races and the shorts will get squeezed. that make this cycle elongated perhaps or directionally different in the short run. And here's what I'm talking about. So the first is in the previous halving events, and this was the mad genius of Bitcoin, right? It's hard coded that the block rewards, the rewards paid to miners to secure the network, get cut in half every 4 years. Now, why is that mad genius? Because it guarantees that the price will rise. Why does the halving mean there'll be movement? Well, think about it. If you got all the miners, their costs are fixed. They're getting a certain number of block rewards and they have a certain profitability. If your block rewards get suddenly cut in half, your expenses stay the same. So now most of those miners would go out of business. Well, that's not what happens. The price rises because they're the ones that have to sell. Remember, they're the hedgers. They need to sell the coins to pay for their expenses. Well, they're not willing to sell them at a low price, so they hold them longer until somebody bids a higher price, and so it causes the price to rise. And on average, it's risen about 100%, which makes sense. If you cut by 50, you have to go up 100. Perfect. Well, this time, it started down that path, but then what happened is runes and ordinals were creating a reusage of empty block space. And in doing these inscriptions, you had to pay the miners transaction fees. Well, if my block rewards go down, normally I wouldn't sell unless I get a higher price, but now I'm getting these transaction fees. In some cases, they're really pretty high. Then I'm okay to sell the mined Bitcoin at a lower price because I've made up for some of it with transaction fees. So that
Mark Yusko explains the reasons behind Bitcoin's price stagnation. He emphasizes the importance of the support level at $66,000 to $67,000, which is currently being tested. He notes that a breakout above the pivotal $69,000 could set the stage for a significant rally towards $70,000. If Bitcoin surpasses $68,000, projections suggest it could reach as high as $108,000 by year's end. Mark also sheds light on how institutional players and ETFs create selling pressure, impacting market trends. With insights on emerging projects like ApeCoin and Avalanche's NFT marketplace, Mark's analysis offers valuable strategies for navigating the crypto landscape. Stay tuned as we dive deeper into these themes and uncover what they mean for Bitcoin's future.
ETFs were launched and new money has come in, not as much as people think, because what happens with these ETFs, and it happened with GLD and others, is arbitrage. So there are these gigantic firms. So like when they say this big hedge fund has 2 billion of the ETF, well, yeah, they do, but they're also short 2 billion of futures against it because they don't take directional risk. They are net zero. So if they're long IBM, they're going to be short Honeywell, or they're, long Cisco, they're going to be short, PayPal or whatever. So they don't take directional risk. They have equal dollars long and short. And in commodities, what they do is they go long the commodity, like GLD, and then they short the gold future. So if you look when GLD came, everyone said, oh, the price is going to go up because there's going to be all this demand for gold. There was, but the price actually drifted down for 9 months because the futures get short. And I talked about this on January 10th, that everyone was talking about the approval of the ETFs, but no one was talking about the CME very quietly increasing the number of futures contracts that were going to be available at the behest of BlackRock. Because BlackRock, yes, they bought $300 million worth of the ETF on behalf of their clients, but some of those clients are selling at least an equal amount, in some cases even more, because they're doing something called spoofing, which is they're intentionally trying to lower the price so they can accumulate at a higher price. This is one of the dirtiest little secrets on Wall Street, right? If you want to buy a bunch of stuff, do you announce to the world that you want to buy? Hell to the no. Because then what's going to happen? Everybody's going to raise the price. Say, oh, you can buy from me at a higher price. So what do? You say, I hate this asset. I'm short this asset. So then everybody panics and the price goes down. And what do? You just accumulate. Inflation is real. And I think what's happened since 71 is that rate of inflation has accelerated. and the current administration basically authorizing the creation of 50% of all the money in the history of the Republic, right? We've been a Republic for 248 years, 244 years, 10 trillion, 4 years, 10 trillion.
That's crazy.
So it is crazy. I mean, it's crazy because a trillion is a number that the average person can't comprehend. Like, we'd have to stay here and do this show together for 31,710 years.
Mark Yusko's analysis sheds light on the complexities facing Bitcoin today, from support levels to market pressures. As we navigate the uncertainties of the crypto landscape, it's clear that understanding these dynamics is essential for anyone looking to invest wisely. If you found this discussion enlightening and want to keep up with the latest insights from experts like Mark, don't forget to subscribe and turn on notifications for our upcoming episodes. Your financial future could depend on it.